Hey, what's going on, Bulls and Bears? Things are getting very, very interesting. I wanted to make this video. Got a lot of economic news, financial news to get caught up on, the markets, where things are headed, much more. Also, a quick mention to those that support me over on Patreon. Just uploaded a new video about what's been happening and where we're headed with the preparation. You need to prepare. We'll talk about it over there. We'll see you over there. Big things happening. Well, let's start off with the markets because the markets are being allowed to drop. And what I mean by that is the powers that be are actually doing a little bit, or they're doing somewhat of what they said they're going to do. They're not buying as many securities. We're talking about the money printers, and that's got investors scared. They're still talking about raising rates. That has investors scared. It has the market spooked, and we saw this huge sell-off. Let's take a look at what happened to end the week. And this would have been the last trading day of the month of April. Let's take a look here. Markets absolutely smashed. S&P down 155. That's a 2.6% drop. Dow Jones by over 930. That was a 2.7% drop. NASDAQ down 4%, over 4%. That was the bigger one, down 536. Russell 2000 down another 2.8%. Pretty much a bloodbath, and we called this back in February when we showed you that topping pattern. Remember, we showed you the Dow Jones, the S&P 500, the topping pattern. Now, at that time, I said patterns don't mean everything because anything could happen. They could come in and lower rates again. They could start buying more securities. They could re-up their mortgage debt purchases. And what happens when the money printers come in and buy mortgage debt? Well, that gives companies more free cash to go back and buy back their own stock, and that boosts the stock market. So we've seen a drop-off in that particular type of manipulation. Is there still manipulation? Absolutely. The powers that be are still buying securities. They're still buying bonds. They're still monetizing the debt. If they were to pull back completely and pull the leg out from under the market, you would see an absolute, almost a straight down dive in the market. So of course they're not going to allow that to happen, but it's interesting what we're seeing happen so far, that they're allowing the markets to drop. The question is, how far will they let markets drop before they come in, reverse course, start cutting rates, and start increasing their balance sheet once again? Well, let's take a look at the balance sheet. This is very important to keep an eye on. And let's start off here taking a look at this chart. And we showed you this before, how the purchases would always climb like a stair stepper. It would always go higher. It always go higher. The following month, also known as a upward trend. And what do we see here over the past few months? Well, we see a leveling off. Now, again, they said they were going to stop buying securities. By the end of the March, we reported on that. They didn't do what they actually said they were going to do, but it's very interesting because they definitely slowed down their purchases, and we're seeing a leveling off now. Will we see a decline like they promised? We'll have to keep an eye on it. If they do, if they follow through on this and they start shedding assets now, and we start seeing a drop, meaning that it's going to look like this. That's sloppy, but it's going to look like that. Then you're really going to see bigger red days, even bigger than the bloodbath that we saw today in the markets. And yes, this could bleed over into other areas, including the housing market. Now, what they're doing right now with the markets, or what they're allowing to happen with rates, they're allowing rates to rise, mortgage rates on the rise. It's not going to print more food. It's not going to grow more food. So we're still going to see other areas where prices are going to continue to skyrocket, but the markets are in pretty big trouble right now. So the longs out there, you might want to watch your step. I'm not saying short the markets because anything can happen. It's completely manipulated, but watch your step if you're long in these markets. That's why I've always encouraged here from day one, keep some cash on the side. That way, if buying opportunities come up, you're going to have some cash to be able to buy when it goes on sale. So for those of us that are sitting in cash right now, it's going to be very interesting to see what kind of buying opportunities might come up. This could also bleed over into the housing market. There's a few different things to watch in the housing market because of what's happening overall in those people that are invested and have their retirement tied to the stock market. And that confidence leads to more people going out spending money. That leads to more jobs. So this could have a big impact on the job market, also on the housing market. When job losses start to increase, you're going to see less demand for housing. Combine that with the rising mortgage rates, and we could very easily see some bleed over into the housing market. Also, when companies have a more difficult time getting easy money and buying back their own stock, they're going to be less likely to hire new positions or expand. Now, I know a lot of the companies, they don't do that anyways. They usually use a lot of the funds to buy back stock instead of passing it along or trying to help the company grow or open up new branches. And we have to keep a close eye on mortgage lenders and banks. Will they have to tighten up their lending guidelines now that the powers that be are no longer buying so many mortgage-backed securities? They're still buying them, but not as many. It could have an effect on the lending. We're going to have to keep an eye on it. Now, with the level of deregulations, that's the deregulation for the banks right now, the banks could still loan out money. There's no reserves required. We also see what the FHA is doing out there. FHA is coming out with a 40-year mortgage to try to help people work out a payment plan for their homes. So that could keep people in their homes and keep houses off the market and prevent or slow down what normally would have been foreclosures. All right, how crazy is it that they have to go to 40-year mortgages now to try to help people not get their homes foreclosed? But that's the world we're living in. It's going to be a balance. They're going to try to keep people in debt. They don't want to just eliminate debt. They don't want to write off debt. But there's going to be a bankruptcy storm, and it's coming sooner than I think a lot of people expect. And what happens in bankruptcy? People write off their debt. Now, it's not just me telling you that things are going to get very, very interesting, even more interesting. The investor who called the housing top and the bottom says it's time to sell. I shouldn't say the investor because there's many investors that make that claim. Bond manager Mark Keisel sold his California home in 2006. That was pretty good timing. When he predicted the housing bubble would pop, he bought again in 2012. That was basically at the bottom. And now he's saying again, it's time. So he must know something. What does he know? Does he know that the powers that be are going to keep doing what they're doing? Are they going to keep shedding assets from their balance sheet? Are they going to stop the support for these markets? Are they going to at least pull back some of the support? Looks like that's what's happening, and a few people out there are raising their eyebrows to this. So it's about ready to get very interesting. We're going to have an interesting summer here. Combine that with the rising food situation, the global food crisis that's unwinding, the water crisis we have here out west with the reservoirs and the lakes at all-time lows and getting lower. I've got a bunch of water bottles over here. I've got hopefully preparation enough to last a few months, but I'm scared to see what's going to happen both in the markets. In the markets, I'm not scared. The markets, there could be a drop, and I'm all set for that. I'm fine with that. The food situation is what really scares me, what bothers me. And also the rising crime that's going to result from the rising poverty as prices continue to rise and people are just going to get to the end of their rope financially. All right, quick report today, everybody. Keep stacking. Hope everybody's well. Thanks for being here. Also, Patreon's new video upload. Check out link down below. The link's right here. Thanks, everybody, for being here. Peace.